You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. Masters in Trading Live, I get on here every day the market's open, 11 a.m. Eastern Time, share my thoughts, and once in a while we'll share our trade of the day. Today, I'm sharing a new special report. If you go to mastersintrading.com and just click under Trading Education, the article is going to be Winners and Losers under the new Trump administration's tariff policies. I did a ton of research over the weekend, compiled a special report, and I want to go through each one of those names with you. I got the chat open. Everyone's confirming you guys can open the document in the chat. If you have any issues, just leave it in the chat. Let me know. With that being said, let's get into it, guys. This is going to be a good one. Okay, here we are, guys. I have you. It's mastersintrading.com. And then just click under Trading Education, and the first read is going to be the weekend read. Winners and losers under the new Trump administration tariff policy. Awesome. Link is working for everybody. Let's get into the report. Special report, winners and losers under the tariff policy in the new Trump administration. So, driving this dramatic shift, Stephen Moran, Trump's likely choice to lead the Council of Economic Advisors. Stephen is known for his out-of-the-box thinking, reshaping how tariffs are viewed. I guess the guiding principles from Stephen Moran are a little bit different. Stronger tariffs, he believes, strengthens the U.S. dollar. Exporter burden, foreign producers bear the brunt of economic strain. National security alignment, tariffs prioritize economic and defense synergies. And then optimal tariff rates. Moran believes U.S. tariffs are far below levels that can maximize both public welfare and government revenue. So again, what we are going to key on is far below. So let's start digging into what industries are going to benefit. Well, one that will benefit, steel and manufacturing in the U.S., producers in the U.S. So as tariffs drive up the cost of imported steel, demand for domestically produced steel like Nucor, and then also Cliff will be a direct beneficiary of higher steel prices. Cliff, well positioned to dominate in this market. So Nucor, going back about 2 years, same thing with Cliff, going back 2 years. These companies got hurt in the latest administration. These two companies should perform very well going forward in this new administration with tariffs. Nucor and Cliff. What else? Winners, defense and aerospace. Lockheed Martin, Northrop Grumman both stand to gain from prioritization of U.S.-based contractors in defense budgets, aligning with national security goals. Again, I'm showing you a chart. We're going to look at a little bit more data, 3 years. 3 years. Trading, investing is about entry points. Are these good entry points? Northrop Grumman. Looks like another entry point right there. We've got a little bit of move going on too. LMT, Lockheed Martin, same thing going back 3 or 4 years. Sells, these are good sells. These are good buys outside right here. LMT, probably a darn good investable name for the next 4 years. Again, I'm looking at a weekly contract. We want to, it's like common sense investing. When they're talking about massive tariffs, we want to look to companies that manufacture in the U.S., okay? Everyone following along? I like to call this common sense investing. What else? Energy. U.S.-based energy is very investable for the next 4 years, but it's an entry point game. So we have Chevron, And then we have Exxon. Again, entry points. Okay? This ship has sailed. This is not where we go to find winners. Right now, CVX, as much as we think it will benefit from US-based tariffs, this move has already been priced in. We don't want to go to CVX. Rather than that, probably Exxon is going to be the better bet. You've had a little bit of move, but nothing compared to CVX, okay? Just because something makes sense for an investment, if the ship has already sailed, that trade is not for you. Wait for it to come back. What else? Semiconductors. Semiconductors, specifically Intel and Micron. The push for onshoring chip production puts these US tech leaders in the driver's seat, leveling the playing field against global competition. But if we look at MU here, we look at Intel here, going back to 2022. Intel's an excellent buying opportunity, guys. Love this trade. Intel is a phenomenal buying opportunity, and you get good levels. If we look at Micron, we do that same thing. Well, these are the good levels, right? That is the buying opportunity. We already made a little bit of move. If it comes back down, MU is a buy. But right now, Intel sure looks like it's offering much better prices. Okay? What about those that are going to lose? Well, losers, and again, I did a ton of research on this. Retaliatory tariffs and a stronger dollar dampen global competitiveness, threatening earnings for exports of heavy machinery. A good example of this is going to be Deere. And why did I share Deere? I shared Deere because Deere had that same kind of move that others, even in the energy space, have had. But I'm a big believer that export and heavy machinery will get hurt with tariffs. So therefore, Deere, I wouldn't chase on the long side. If anything, I would think is a short. What about retail? Retail is another one that I believe is not going to perform well. Target, Walmart. Walmart's a really strong stock. Target is more of a buy than a sell. Maybe if it gets up here, but otherwise, I just don't want to be long Target. I don't want to be long Walmart. I'm going to be looking to short. This last one may surprise many of you. Tesla. Tesla has got very complex international supply. Tesla's production costs are likely to rise, squeezing profitability. Well, you did get a big move from Tesla because Elon Musk is as tight to the president as anybody. But Tesla's going to have to make some money. Tesla's going to have some trouble if they're not expanding out of their automotive group. So I always tell myself stop so I don't get carried away. But go over the document, mastersintrading.com, go under trading education. I wanted to offer some sectors that will perform well, some sectors that are going to get hit. You don't have to only go to these stocks. Look in those sectors and dig in deeper. Try to find your own buys and your own sells. Leave them in the video. I'd love to hear what you think. For everybody in All Access, Trump just announced that the U.S. is dropping out of the World Health Organization. When the U.S. makes a big move like that, companies are affected. In our All Access portion, I did a little digging on what companies that's going to affect on the upside and what companies it's going to hurt on the downside. Thanks for watching. I'm live every day the market's open, 11 a.m. Eastern Time. I'll see you guys tomorrow. Everybody in All Access, you guys don't go anywhere. Stay tuned.